you are self-employed, one of the hardest things to adjust to is paying your self-employed income taxes. Now, unfortunately, many of you are wondering how you can get a tax refund if you are self-employed. Now, there's a major difference in taxation between those of you who are self-employed and those individuals that are employees employed by other companies. When you are self-employed, there is no employer to pay your Social Security and your Medicare taxes. Now, Social Security and Medicare taxes are paid for by the employer, and when you are self-employed, you are your own employer, so therefore you are required to pay that 15.3% in self-employed taxes. Now, this can make tax time extremely difficult on those who are self-employed. So how can you get a tax refund as a self-employed individual? Now, when you are self-employed, your tax return is going to include what's called a Schedule C. This is the worksheet that includes not only your business income and your gross sales, but also your deductions that are removed from your taxable income. For some, their business income was small enough that their other deductions in other areas of their taxes, as well as credits filed, may actually end up resulting in a refund. Now, in tax year 2022, I want you guys to know that there is a specific tax credit that applies to this year only. This is not a deduction, it is a credit, which means money that goes straight to you. Those of you who qualify for this credit, this is going to equate to a refund. Now, I want you to watch that video, which is linked down below, where I delve into exactly what that tax credit is and who qualifies for it. The way that you may qualify to receive a tax refund if you are self-employed is going to be if you overpaid into your estimated quarterly income taxes. Now, if you are self-employed and you have previously paid self-employed income taxes, and in the next year you anticipate that you will owe a tax balance of at least $1,000, the IRS requires you to file quarterly estimated income taxes. This basically means that the IRS wants you to estimate the amount of tax that you will owe next year, chunk it out into 4 different payments, and pay each of the estimated balances quarterly. Now, because this is an estimation, some people may overestimate and overpay their estimated taxes, meaning that they had a surplus that they remitted to the IRS. When they file their income taxes, that estimated income amount, which was over what they actually owed, would then be refunded. Okay, you guys, so I hope that helped to clear up some of the confusion surrounding why you typically do not receive a tax refund as a self-employed individual and when you can expect that you may actually receive one.